Good afternoon, everybody. Welcome to your Monday edition of the TraderMerlin Show. Hope you had a great weekend. It is, again, your Monday show. It's going to be a shortened week this week. I had to think about it over the weekend of how I was going to do this week because obviously Thursday, I never work on a Thursday, which is my birthday, and then on Friday, I'll be getting ready for a big event. So I'm just going to do a Monday, Tuesday, Wednesday show this week. I'm going to try to bring a guest on for Wednesday, a little bit of an expert in the bond market, but we'll see if I can persuade him to come on the program. Anyway, hope you had a good weekend and enjoyed some nice market movements today. I'm going to talk about this to start things, which is oil wars. Not really oil wars, but just typically what happens in business cycles. We go back into what happened in the 90s. You saw these .com companies come to market and each trying to dominate their own little corner of the market, get a little foothold so they can, persevere for the future. Well, typically what happens is companies will come through and purchase some of those companies, consolidate, right? Buy this one to help give you a more strategic advantage going forward. And I think that's what we're witnessing in the oil world right now. If you look at the graphic here, I've got two battling oil refineries kind of head to head. It should have had more of a battle scene to it, but the question came in from Thomas is, can you talk about Chevron's purchase of Hess? I'm long Chevron CVX. So yeah, let's real quickly talk about what happened in this industry. I'm not a huge player in the energy stocks. I'll buy XLE. I'm presently long some call options expiring in January on Exxon Mobile, but typically I don't dabble that heavily in the area. I'll jump into crude oil futures, whatever. But what happened over the past month has been pretty interesting. You've had some pretty big purchases. First off, you had Exxon Mobile do their really big purchase of Pioneer Natural Resources, and that was a $64 billion acquisition on, I want to say, October 11th. So obviously that's a huge consolidation movement. Both Exxon's the biggest in the index of XLF, and then you had Pioneer was pretty big as well. I'll give you those percentages here in just a second. So when you have that kind of strategic alliance or consolidation between two real big heavy hitters, the underlings there kind of have to do something as well, that they're going to start to fall away. And the reason for that is economies of scale, right? You can now streamline your operations, and typically your profit margins will increase, particularly if that company that they acquired was direct competition. Now they may be able to raise their prices a little bit. They can cut their costs by unifying both companies and cleaning out some of the low-lying fat, if you will, that they can get rid of. So it was a good move for Exxon to go for Pioneer. The question is it good for Chevron to go after Hess? Well, let me bring up a couple of charts here. Let's start with I'm actually going to start with this, which is the XLE. So I went out to bar chart. I typed in XLE just to see who are the major components of this energy index. Now, as we know, this is not just oil companies, it's refineries, it's equipment companies, but everything to do kind of with the energy space. I'll zoom in here a little bit so you guys can see how large these are. Notice Exxon right now is 22% of that index. Now, that doesn't mean necessarily that Exxon is the biggest and most powerful, but in my experience, these portfolios, these ETFs like this, generally try to put the biggest, most powerful ones in the heaviest position, just like we saw with the NASDAQ 100. You've got Apple and Microsoft, the biggest ones in that. Of course, that's in many cases determined by market capitalization. So you notice you got Chevron and Exxon. Exxon number one at 22.22% of the index, Chevron at 18%. After that, it drops significantly. Now, you have ConocoPhillips, who did some acquisitions. I think they did some stuff. I think they bought Concho Energy a few years back. So they've done a little bit of consolidation, but still relatively small. If you look at the acquisitions that just happened, Exxon Mobil's at 22.22. Then you look at who they just acquired, which is Pioneer Natural Resources. That's PXD. That's 4.15. So you'll see, I'm not sure exactly how they're going to do it. Are they going to keep Pioneer as its own name? Will they consolidate that into Exxon Mobil? That is to be determined. Probably make more money by keeping it as Pioneer and just streamlining operations. If you look at Chevron went from 18.39, and then they acquired Hess, or acquiring Hess at 3.2% of the ETF for XLE. So what you're seeing is the top two leaders in this index now gaining even a stronger foothold by buying some of the other top 10 partners in this. And you still have a lot of other ones in here, right? You got Occidental Petroleum, Valero, Phillips 66, Marathon, Schlumberger, which isn't really oil, more equipment. And they have EOG Resources. So there's a lot of stuff in here that I think there still is some potential, but I would argue that the big deals have already gone by the wayside. So I don't see anything really noteworthy here other than it's just an attempt to stay as the leader in those industries for Chevron and for Exxon Mobile, going out and acquiring some competition, or maybe in a space that you want to innovate in, maybe someone who has better equipment, locations, etc., to utilize them and their spot. So, Thomas, that's pretty much it. Now, typically what happens when company A buys company B, there's generally a market reaction. When company A buys company B, company A's share price usually falls, and company B's share price usually rises. What's unique about this is we're not sitting at a point where markets are depressed. We're not sitting at a point where markets have collapsed and you're now bottom fishing and buying up all these little companies to get bigger as you go. We're looking at energy peaking. I mean, it's surging. So let's look at XLE's ETF here. All right, this chart looks extremely bullish. This is an ascending triangle that we have going on in the energy ETF. Looks real strong. So they did not get a good deal. When I look at Chevron and I look at Exxon Mobile and their purchase, it's not like they bought these companies at a discount or at some sort of rebate or at lower price than they could have. Here's the chart of Hess. So Hess is the one that was acquired by Chevron. You know, this chart, they're buying at peak prices. I'll go out to the weekly to put it all into perspective for you. You're at all-time highs, right? So Hess was doing nothing in the 80s, 90s, slowly drifting up, and all of a sudden from 2020, screaming to the upside. It's gone from about $25 up to over $160, and here we are today with Chevron purchasing them. So I think Chevron may have jumped the gun here a little bit in buying these things after monster rallies in price. Now that said, maybe we should flip and look at what happened with the Exxon Mobile purchase of Pacific. So let's go look at PXD here real quick. So here's Pioneer Natural Resources. So this is also on the weekly, and you can see similar picture, all-time highs, or right near all-time highs. The all-time high for Pioneer was right around, let me give you that high price here for a second, 288, and we're currently at 247. So it's definitely off of its highs, but still you're paying a fairly lofty price for Pioneer Natural Resources if you're Chevron. Now on the day like today, when that announcement was, or not today, on the 11th of October, I think that's when that one was made. I can go back here onto the daily, pull up our daily time frame, and it's weird because it was really jumping before that. The news came out here. This is headline for PXD. The 11th is really when that one happened. That should have been right in here. So you did see it jump up the next day and continue to rally up over the next 5 days on that announcement that Pioneer was going to get purchased by Exxon Mobile. Now, what did Exxon Mobile do? Now, normally they sell off. So if we go back to the 11th when that announcement happened, yeah, they did. They gapped down from their closing price the day before was 110. They fell all the way down to a price of 106. I'll call it 107. So they gapped down on that. That's a very typical market reaction. Now, what about today's action? We just looked at Hess. Well, here's Hess's chart. You would expect this to have jumped up today. Instead, it barely gapped up and sold off the remainder of the day. What about its acquirer, Chevron CVX? All right, so this is normal. This makes me feel like this might have not been a great deal. It was a $53 billion deal. The one for Exxon Mobil and Pioneer was $64 billion. So obviously some monster acquisitions going on in the energy space. It's just a question of, was this a knee-jerk reaction to keep up with the Joneses? Has this been something that's been going on for quite some time? That I don't know. But in all my years of doing this, when I see an acquisition, it almost, I would say probably the 90% category, the company that does the buying drops in price and the company that gets acquired surges dramatically. If you look at that chart of Hess, they did not surge, they actually sold off most of the day. It did rally higher. It was a green candle at one point, then all of a sudden came ripping back down here. So kind of interesting on that one, Thomas. I don't know if I'm necessarily feeling bullish on Hess because of the acquisition or Chevron. Now, if we think long term, what's the impact of this? Again, I talk about consolidation, economies of scale, and kind of getting that a bigger footprint for Chevron, which is great. Now, obviously, Hess has some advantages that maybe Chevron wants to take advantage of, and also consolidation. Once both companies start to merge, they will go through and find out what are duplicate operations. Can I remove some jobs from one place, and then all of a sudden, I'm starting to save on costs overall. So, not to compare the charts. People knew Hess buyout was coming as after the Exxon acquisition of Pioneer. I knew that they were talking about Chevron buying someone. I didn't. I heard it was rumored to be Occidental, and then I heard rumors that it was Hess. Today, the ultimate news was Hess. So if you can go back, find out when that initially came out there, Big Eb. I'm not sure when the rumors were flying or circulating. I'm not knee deep in it to that extent. I'm just looking at it now of like, what did what does this mean going forward for these two companies? Now, I definitely differ on many of people's opinions about the price of oil. I'm not a believer that oil is going to all of a sudden start to decline because everyone's using wind and fossil fuels and alternative energy, right? I just don't believe that. I think that people will still continue to use oil for many different purposes, whether that's for plastics or transportation, aviation, whatever. I still think they're going to be using fossil fuels. So I see oil is fine in the long term. And then again, I add on to that the conflict situation that could potentially escalate here in the Middle East. And that would, in my mind, drive these prices even higher. Now, if we look on the day, what happened with crude oil, here is your crude oil chart down 2.94%. So not doing well on the day. Good. Hopefully we'll get peace on earth and all will be resolved over there. And then Iran will back down. Russia maybe will come to their senses, and all of a sudden we have everybody firing all cylinders, and then oil might actually start to drop in price. But I don't know. I don't see that. I think it's just still going to be a little bit too high tension there, and egos, not only from the U.S.'s ego, but also from Russia, Iran, and other countries' egos in this. Hess did well in the 70s. Logarithmic scale shows the Carter yields, 3x gas and stock prices. Do you like bar chart or TradingView, and why? I like them both. I mean, I like the research and numbers on bar chart so I can dig deeper in all the data. I like the charting on TradingView. Just I'm used to it. Plus, it's one of the few spots I can go to. If you notice my watch list over here, Manatee, I can break it apart kind of how I want to watch the market. So I've got my top 7, which we'll discuss here in a little bit. I have currencies, I've got interest rate products, I've got commodities, I've got metals, sector ETFs, and then I have my cryptocurrency folder over here. So it's one of the few platforms where you can look at everything all at once. Yes, I did see 2 hostages released. It says every 3 or 4 days. This could go on for a couple of years. Yeah. And who knows what the posturing will be, Big Eb. I don't want to speculate on that. I hope for some peaceful resolution, but I just, knowing the history between those two countries and then the global pressures on both sides, I don't know. This doesn't seem like it's going to be that good of an ending. So, let me run through some other stuff here since we talk about, the big dogs, and that's Chevron and Exxon Mobile. You have Pioneer getting acquired and Hess. What about EOG? Someone asked, is EOG a potential purchase target? Well, of course they could potentially be one. They might actually be one of the ones that does some purchasing. But if you look at the chart, it looks a little bit weaker than some of the others. And this is just on a daily. I'll flip it over to a weekly since we did that earlier. Granted, it's been screaming. Energy's been phenomenal, really, for the past 20 plus years. But looks like it's slowing down a little bit. Looks similar to one of the charts we just looked at. Yeah, I hope not, Margaret. I really hope it doesn't. But I'm a probability person, and if I just look at all the facts, at least from what I understand those facts to be, who knows if the media is giving me the right facts, but as those facts stand, it seems like on the probability scale, it's more likely that I want to say war, we'll just call it conflict. Yeah, I'll call it conflict. This makes me feel better about the situation. We call it a conflict. I think it's going to spread as well. So EOG really kind of caught sideways consolidation. And Pepper says oil bear flag. I'll look at that in just a second. Let's go. What are some other? ConocoPhillips is another big player in this space. Oops. Let's go COP. Right, that one looking slightly better than we just saw with EOG. How about Phillips 66 PSX? Right, this is definitely one of the smaller players, but its chart is actually looking better. For some reason, it took this big hit here back in October 2019. But all of a sudden, it's really starting to look much stronger than some of those other ones. I mean, just look at the last, what is this? This is since 2016. The trend from 2020 on Phillips 66 is much better than what you saw on, actually EOG was pretty good as well. It's just the recent consolidation. Cool, ConocoPhillips. And 2020 really was a gangbuster year for all of them. How about Valero? All right, so they're all looking pretty good. My concern with what Chevron did in buying Hess was I think they may have overpaid. And I don't know all the numbers. I know we have people here who are much better at looking at the fundamental analysis side of things and all the data points. That might warrant the purchase at this point. Are you on BP? But for right now, buying things at all-time highs like this is like, Here's your BP. Now, you notice, maybe they get in on the action, but BP has certainly been crushed. When was Exxon Valdez? Was that 2004, 2005, somewhere in there? Let me check on when that tanker crashed. Oh, that wasn't BP. What was the BP spill? Oh, it was in the Gulf, wasn't it? 2010. 2010 was that Deepwater Horizon spill in April. Anyway, I was trying to put these exploration crashes. So that was back in here. You can see where that one hit. They were up at $60 when that spill happened, fell all the way down to a low of 26, and recently hit a low of about 14. So something, it looks like, fundamentally is wrong with BP at this point, because it doesn't look like any of the other competition. Here's Exxon Mobile again, right? Chart looking much better. At least these companies have recovered, where it looks like BP has not. PXD. We already looked at all these. So my point is this. For Thomas who sent that question, you're long CVX. Well, if you look at CVX's chart, all in all, things look good, right? It looks good. However, I would make the point or contention that over the past 2 years, you're looking at significant consolidation. Now, if we wanted to, let me get some of these lines off here. I don't recall drawing these lines on Chevron. I'll get rid of those. It was a while back. If we go through the way I draw trend lines is going through the body points and see most points of contact, I'd argue there's your trend line heading up. Going from the top down, well, it looks something like this. So we are coming to a flag pattern here. It's really a pennant formation. At this point, it doesn't excite me either way, bullish or bearish about Exxon. I just kind of wait for it to pop to the outside one way or the other. So, I'm not a huge fan of buying Chevron. I'll be honest, if I had to choose right now, whether I had to buy it, short it, or stay in cash, I'd stay in cash. There's just nothing here that's making me feel like it has to move up or down. And the fact they just shelled out $53 billion for a stock that's at all-time highs. Here's Hess. It leads me to believe that they may have overpaid for this company. I don't know. I haven't looked at all the numbers, but just, when you see a chart that looks like this, typically that means this company is doing very well and their business is doing well, but are you paying into that hype? Because we've had some pretty big energy run-ups here recently, and I think that money's been pouring into it. May have driven it up a little bit too much. Jimmy wants to know about Oxy. Occidental Petroleum. Another boring-looking chart. This is also on the weekly. So if you look at this for the past almost year and a half now, Occidental Petroleum has had a pretty wide range, between $56 and $76. So yeah, it's $20 range. But right now, just consolidation. My rules for consolidation are simple. I'll map out the range between the highs and the lows. So I'll put 2 lines on this bad boy. I'm actually going to go to this one here because it's more points of contact. Between those 2 red lines, if you can find trades to buy the bottom and short the top, I would say go for it. Otherwise, I don't see a need to be buying Occidental Petroleum right now. And most of the time, as you guys know me by now, because I don't have the time or effort to break down the energy and make it one of my let's just say specialty knowledge areas, I'm going to stick with XLE. And that's primarily because it's diversified. I don't have to worry about one company screwing up and crushing me. I have more diversified holdings here, and therefore it's a bit safer for the long haul. All right, so I think I got Thomas's question on Chevron. You're long Chevron. I'm not a fan of it at this moment, but if you were holding it, I would certainly put a stop loss in place, because if you look at that CVX chart, it could break just like Tesla did. Remember, CVX has this pennant formation, and look at TSLA. If I look at this on the daily time frame, right, you had a similar pattern forming on Tesla. It had a nice run up, consolidated in this little kind of pennant formation, and then it's broken, all of a sudden going screaming to the south side for the past few days. So there you go. It's a floater. There you go. Let's see. So you guys know I was in the IWM trade. I closed out my IWM today when we dropped all the way down to my target level. I told you my target was 165 on IWM. We hit 165 on IWM. I closed the trade out. Now, I do still think we're going to be going down more, but at this point, right at a demand zone, took that money off the table. So let me just show you that trade. I think several of you are probably still in the IWM, but just letting you know what I did with my shares today, or my puts today. I was long puts, and I closed those out. So here's why. I've had, get that level out of there. That was a great zone. Done now. If you look back here over the past, well, I don't know, several months, I'll make this a weekly just to make it easy for us to see and not have to keep scrolling and consolidating. You can see this bottom line. Let me get these lines. Too many lines on my chart. Apologize for all these lines. I just doing analysis for you guys. Sometimes I leave things on there. We'll get rid of all this stuff. Okay, get rid of that box. All right. So if you look right along these lows right here, that's right around 162.78. So I kind of mapped it out as being the target for the head and shoulders pattern. We had an inverted head and shoulders pattern, or sorry, we had head and shoulders pattern, and I was using that as my measuring object and target to get back down to. And I told myself if it gets there, rules are rules, close out. Now, I've already closed out the position once. As it rallied back up, I shorted again, which actually made it even better. That one made me feel really good about that one. But I closed that out today, and it's basically this head and shoulders that you can see right there. Well, it's actually on the IWM or RTY futures, so I'll look at that in a sec. But yeah, that one is out and done on the Russell. Now, could we go lower? Sure. Now you got that. You can see that 162.78 line goes back to these lows from right around October of last year. So we're talking a full cycle here. But I'm not going to look that gift horse in the mouth. I'll be happy to take the money off the table and reposition myself if we break. If we break it, I'll probably go short again and leave that money on the table. But at least it gets me. I know I've locked in that profit, and I'm not going to be subject to a big volatile bounce here. Which talking to a buddy of mine over the weekend, he has his thought is we're going to have a huge bounce here at the end of October. And I was like, okay, well, everybody can have a hypothesis about where the market goes. And you can all think it's going to go up, down, or sideways. Bottom line is put your money out there and see if your thoughts, your analysis is right. I bought back the put position I closed on Friday. Back again, huh? All right, man. See, Warren Buffett talks about CEO overpaying for other companies and their stocks. Yeah. And I think, as I mentioned earlier on that one, Manatee, I think that it was a knee-jerk reaction by Chevron to acquire Hess. Maybe it's been something in the works for a while. I'm not familiar with it. But you can't just let Exxon Mobile go ahead and buy Pioneer and get bigger and bigger and bigger. You'll start to lose your competitive advantage. So you've got to stay big. And I think that's what Chevron did. I think they may have overpaid for Hess, but we'll see in the coming weeks how that all pans out. So Betty, you asked this question. It was actually last week. I didn't get a chance to get to it. You said, what made you choose the 155 IWM strike versus the 170s? Well, the reason I chose the 155 was if you look further out, you can see there's this little area of demand. We actually gapped down. I'll zoom in on it for you guys so you can see it a little bit clearer. Sorry about this. I'm talking about this little island of price. So you gapped down, you stayed there for 4 days, and then ripped out of it. So this is a very logical target. So I was going to use that as kind of the target for price to fill these unfilled gaps. I knew I had plenty of time since I went out to January on these. So I wasn't too worried about the time constraints that faced me. But I probably could have gotten more money. Well, actually, it would have cost me. I wasn't selling puts. I was buying directional. It would have cost me a lot more money to buy the 165s. So I got the 155s at a much cheaper price. And because of the way this thing's moved over the past 2 weeks, the premium on those has gone up, exponentially. So fine with that one. It was just a matter of personal preference. I wanted to go somewhat beyond this area of demand where I could get those options for a cheaper price. And I've noticed that if I buy options directional, let's say I'm at the money, and let's say I pay $10 for the option. If it moves in my favor significantly, and all of a sudden I get a really big rally up in price, and let's say I bought some calls, the spread, if that thing gets like $30 or $40, all of a sudden gets really wide, and I end up giving away money with that. So I'd rather buy something that's very cheap with a super tight spread, and then when it moves up to a normal price, let's say I buy them at 50 cents, and all of a sudden they rally up to $2 or $3, I'm still getting that same percentage rate of return, but it's going to be much easier for me to sell those because the spreads will be tighter on those options. Option chain, typically when the prices get really high, the spreads get real wide, and sometimes you give that money away. So that's the reason I chose the 155 versus the 170s. Let's see what else. Scott asked this one, and then I'll go into our markets and wrap things up. Well, we're already half hour in it. Cool. What is the news in crypto that caused it to go up so much this weekend, Scott? I think the bulk of the talk track is what we've been talking about for a while, which is that spot Bitcoin ETF is going to get approved. I'm pretty sure it's going to get approved. I thought it was going to happen in August when the first meeting came up, but you're hearing the SEC backpedal. There was an interview with Gary Gensler recently where he actually talked about this, and he says, we've got, I think, 9 applications on our desk that we're looking at. it made it sound like, okay, he's actually reviewing them right now. I know they're getting pressure. 4 senators wrote letters to Gary Gensler and the SEC, and they made those letters very public saying, look, we are demanding that you get a spot Bitcoin ETF out there. You're causing a disservice to the people out that of investors. You've already said that Bitcoin is a commodity. Therefore, let's allow the ETF, right? You've got gold ETF. Why not allow Bitcoin? So my only concern was last week we saw some pretty big manipulation in price because of what happened with Cointelegraph and their news announcement. I think that creates a little bit of uncertainty on the part of the regulators, but I'm pretty sure it's going to happen. I do think you'll see a spot Bitcoin ETF by the end of the year, and I believe it's going to be multiple. Now, if you read the article I wrote back in April or March of this year, which was why Bitcoin could reach $45,000 by August, it had all to do with this. And if we get BlackRock, all right, let's just run through some of the names. You've got BlackRock, you have Valkyrie, you have ARK, you have Grayscale. Let's just say those 4. Let's say the SEC looks at those applications. There's 9 of them out there, but they open up those 4 to spot Bitcoin ETFs. Every one of them is going to have to find Bitcoin. Now, my assumption is that they already have been accumulating a little bit. Right? That kind of strange if they didn't start accumulating. But there's no way that they're going to have enough yet to suffice all the demand. So the question I have is, well, where's that Bitcoin going to come from? If BlackRock has a spot Bitcoin ETF, they have to own physical Bitcoin, and it'll all be tracked and recorded. You'll be able to see it through a wallet address because they're going to need to be showing that as an audit trail. So where are they going to get it? And I think I can't remember off the top of my head, but I think I wrote down 3 different things. Number 1 is they're going to make their own Bitcoin. Well, you can't do that, so that's not going to happen. They can't make your own Bitcoin. Number 2 is they're going to have to go to the open market to try to buy it, meaning they're going to have to go to an exchange like Coinbase, like Binance, like Kraken, like Gemini, and go to those exchanges and actually go to try to buy on open market. If they do that, they're going to drive the price up to $100,000. There's no way that they'll have the kind of volume they need on those retail exchanges. The third choice is they actually go to these exchanges and work an institutional deal where they actually start to buy the inventory of these exchanges. Now, that would be a bit problematic because now are those Bitcoin that they're buying customer funds? Right? That's a bit tricky. And then the third option here, so that was the first, second, third. The final option would be they go to the government, who's sitting on, I believe, about $5.5 billion worth of Bitcoin at this moment in time that they've seized in various raids, et cetera, over the years. So that might be where this is going to come from. So it looks to me like whoever has the best political pull, whoever has the best rapport with politicians, meaning who's paid the most, who's lobbied the most, and who's funded politicians' accounts, will probably have first dibs at that $5.5 billion worth of Bitcoin because they're going to need to have it for their portfolio. Now, somebody asked me recently, do you think that, I think we talked about in the show, do you think that like BlackRock will pull their intents to release a spot Bitcoin ETF if the price of Bitcoin is too high? It means nothing to them. The price of Bitcoin is irrelevant for their operations. It doesn't matter. They'll just buy if customers are demanding it at this price, then they're going to keep on buying it, period. So yeah, I don't think that one matters at all, but I think it's going to be a pretty big thing for crypto. And if you notice it happened over the past 48 hours, this weekend has been great for those of us who are holding crypto. Let me bring some symbols over here. Here is your Bitcoin chart, and this is on a daily. So Bitcoin right now has come screaming back into those highs we saw back in July, which is great. If we close above 32,000, I think it's going to kind of be off to the races here. Just to give you a percentage gain idea, going back on a daily chart to the low price we saw on October 12th to where we closed today, it's almost 19% gain for Bitcoin. Obviously, it made for a fantastic weekend for me. I'm loving it. But again, I'm going to hold until November of 2025, so I don't really care what happens. But you have other ones that have done really well. There's several in there that I've been holding in some of my bigger positions, like let's go to Chainlink. Right? For those that know crypto, Chainlink is an oracle. An oracle are essential for anything in the smart contract space. You cannot have smart contracts function without oracles. And in the last 4 days, it's up 40%. So I think what Big Eb said here is you're getting FOMO. I agree. I think what you're getting is people jumping into it. I think it's the realization that you're starting to see softening on the part of regulators. And when that does happen, it'll open the doors to more money coming in. I think the big piece here, in my mind, is the opposite would happen to .com. So I think I've mentioned this one to you guys before. If you look back to the late 90s when we had the .com bubble, these were companies that were going public, and most of the institutional money was in on it early. They got to buy these shares before they went public. So when these companies went public, it was the retail investors that were holding the bag. I mean, unfortunately, that's just the way the markets work, right? The big corporations, the big money, they get involved with the IPOs, they make the IPO happen, they dump it on the retail population, and typically the IPOs will sink for the first 90 days. With crypto, it's been totally different. It's been small fries. It's been people who don't have a lot of money. It's been people who kind of want to change, see the difference in technology, like myself, right? I don't have millions of dollars in crypto. I mean, I will someday, but for now, it's not in the millions category. But I'm a small fish, and I know there's many people out there who have been buying little bits. This whole thing started because of retail. It's the opposite of the .com. So you have retail people buying in. What happens when institutions come in? And that's kind of why my forecast for Bitcoin and crypto in general has been so lofty, is like, I don't think we've even seen institutions come in this yet. You imagine, or you remember what happened when Tesla said they were buying some Bitcoin. It started to just vault up. Well, at some point, once we get this as a little more guidelines on crypto, particularly with Bitcoin, we establish it's a commodity, who regulates it, what are some of the rules about it, you'll start to see companies like Apple and Tesla and Microsoft and Google all be holding small portions of Bitcoin. Remember, they're going to have to buy from a very limited pool. One of the guys I follow on social media says that if you hold one full Bitcoin, a whole coiner, you'll be a multimillionaire in a few years. And I think that's probably true. Probably over the next decade it'll take to get there. But what will a spot Bitcoin ETF approval do to BITO at all? I think it's going to the volume on BITO is going to just dry up, right? So let's look at BITO here real quick. So for those that know, BITO is a spot Bitcoin ETF, is a futures ETF. So it holds Bitcoin futures. Now, what I don't like about BITO is you look at the price. Okay, it's $16.12 right now. Well, what is that? What am I buying? If I buy one share of BITO, what exactly am I getting? How much of a Bitcoin is that? There's no direct calculation, which is why I love GBTC, because GBT says if you buy one share of us, it's 1/1000th of an ounce, or 1/1000th of a Bitcoin. So right now it's trading at, call it $24.69. That means that in theory, Bitcoin should be at $24,690 right now. But there's a disconnect because GBTC is a trust, not an ETF. So I think what will happen, if you look at BITO, I think the volume is going to just dry up on BITO. Here's your volume of it, right? Not looking that great, but volume has been rather consistent. But I think as soon as that Bitcoin ETF comes out that's spot, whether it's BlackRock or Valkyrie or ARK, I think you're going to see the volume just dry up, and BITO will probably be done in a couple of years. Whatever profit on a higher Bitcoin price is good for BlackRock. I know this. Yep, exactly. But it's not going to deter them from buying it. So that's my thoughts, Margaret, on what will happen with BITO and the other Bitcoin ETFs. I think that most of them are junk just because they don't really tell you what they're in. I mean, if you go into an ETF, it should tell you exactly what's in it, right? So example, I'll go over here to bar chart and I'll bring up the Bitcoin ETF and look at their constituents. Okay, it's got some Bitcoin non-equity index. So it's got the April and May futures, but this is already expired. It's got treasury bills in here. It doesn't even give clarity as to what it is. There should be no treasuries in here. This should be all Bitcoin. Right? If you're going to do Bitcoin futures, fine, but it should be all Bitcoin futures. And I believe that the reason they're doing treasury bills in here is twofold. Number one, it helps politicians approve it. It helps, whether it's Democrats or Republicans, they're actually buying treasury bills. So they need buyers for treasury bills, right? The more people that buy treasury bills, the more yield can drop. So if this ProShares ETF is buying treasuries, that's great for the government, and it also reduces some of the risk because you're no longer in volatile Bitcoin. But remember, the whole point of this is to be in Bitcoin. I don't need to be buying treasuries, which is why I say leave it alone. This stuff is in my opinion, trash. I would never buy a share of BITO under any circumstance, period. I don't want to support it. And also the futures, right? Now, I don't trade Bitcoin futures. If you look out here, here's your Bitcoin futures. Well, again, I actually love the futures market for obvious reasons, but with Bitcoin futures, it's not physical delivery. If this was a physical delivery product, then I'd probably be trading these very active and use them as a mechanism for me to buy Bitcoin. But they're not. They're cash settled. So there's no physical Bitcoin delivery. I think they need to change that model. And what I think will happen is if I am, okay, you have CME, right, is the one that's got this Bitcoin ETF right now. Well, if I'm the CBOT or ICE, I'll release my own Bitcoin futures product, but I'll make it cash settled, and demand will be higher for that one most likely, all right? If you don't want to take delivery, obviously you do the cash settled, but you people like me who will say, hey, if it drops down to this price, I'm willing to buy it, and I'll buy those futures at that price. So I think that's a win-win would be a Bitcoin futures deliverable, not cash settled. If that makes sense to everybody. So Scott, that's my answer to your question. Is it's FOMO? It's the expectation that it's coming. I think what we're getting is information leaking out that it's going to happen here soon. That regulators are going to approve this. We're going to see SEC approve something here very soon. By the end of the year would be my bet. If anyone would like to take a bet on that one, I'm happy to take it. I'm betting, but by the end of this year we'll have a spot Bitcoin ETF. If you don't think so, let's make a wager. Let's make a friendly wager. All right. I have to wear your pink Dallas Cowgirls cheerleader jersey or something. I don't know. Anyway, let's see. I had a couple others in here. That's all I actually had for today. Let me see real quick. I think I saw some comments on there. Those are political comments, though, so I'll leave those ones alone. All right. Any other last minute questions here before I wrap up? Let me go into your economic calendar and earnings. Obviously, we've got a lot going on this week. Next week actually has a ton of stuff too, especially with the FOMC meeting. But this week we wind down the best week of the year, October 26th. So let's go to the economic calendar just so I can wrap some stuff up here and wait for questions on your part. Nothing on Monday for the U.S. markets. You can see there's really nothing. Now it all kicks off tomorrow with manufacturing services it starts in France, then goes to Germany, then it goes to the European Union altogether, then to the UK, and ultimately stopping with the US. Now that's going to be early in the morning. You can see here, oh, what is going on? My clock is all messed up. I don't know what's going on here. Pacific time. All right, well, apparently it thinks that it's 1:44 right now. I guess I got to do daylight savings. Let me change this real quick. Yep, doesn't have that. There's my setting to do daylight savings. Anyway, we'll just leave it there. So the announcements for the U.S., which is Flash Manufacturing and Services PMI, are going to happen. I believe that is going to be at 7:45 in the morning. So in the 1 hour into the market session, I believe, since my clock is all off over here. Other than that, if you're trading the euro, if you're trading the British pound, you also have manufacturing data. And I received some comments from viewers that says, Merlin, who cares? Why talk about manufacturing? We all know that America is not a manufacturing country anymore. Yeah, I get that. But it still is a part of the economy. While it's not the major part anymore, it certainly does have some impact on jobs, on costs, on production. So that it makes it worthwhile. I believe the number was like 15% of GDP or 14% of GDP comes from manufacturing in the U.S. So, of course, if we want to see GDP numbers increase and economic growth, it would help to see some manufacturing data. Now, the numbers that came out in the last couple of weeks have not been that great with manufacturing data, but we will have more coming out next week. We also have the Richmond Manufacturing Index numbers will be coming out. And you notice these have not looked great. We've been below zero for quite some time, which means contraction and pessimism with regards to manufacturing. Yeah, that's right, Lisa. I know it's next weekend. That's why, I'm just kind of surprised that my clock is all messed up already, because it should be. It's not yet. I think whoever built the Forex Factory site thinks that it's already daylight savings time, unless I'm wrong, because usually it's the weekend before Halloween. Right. Rate statement wise, we'll go back up here. That's gonna happen on Wednesday, which we'll talk about. So that's your main economic calendar. Now, real quick, let's just show you some currency charts, which you don't normally take a peek at, but we have seen the euro obviously in a pretty sharp decline. Over the past couple weeks, though, it's ticked up a little bit. You had some pretty big volume last week, and all of a sudden starting to move back up. So if you are going long on that euro, you might want to be looking for some supply zones here to potentially short it at. Is this the reversal? Does this mean that we see, the big move up from here? I don't know. I still feel bearish on the euro, even though it's had a great run up over the past couple days. British pound also will be making an announcement tomorrow with regards to their manufacturing and services numbers. Same picture here. Pound has been just slaughtered. Really, it's the dollar just taking the charge today. Actually, a little bit of a pullback. Now, I brought this one up here to kind of wrap things up. You notice that we've now got a small little double bottom forming on the U.S. dollar. Now, it's a double bottom forming because we don't know if this is a double bottom, right? It could break this and just scream down from this point. That obviously would be great for anybody who's bullish on these markets. If you see this dollar collapse, we'll have to wait and see. Let me move this line down to the lows of today, which is right around there. So let's keep your eyes on those lows. Again, I'd say you've got a demand zone just ever so slightly below current levels. I will draw it out for you as well. Let me get this over here. And that tiny wee little demand zone is right in there. It's actually a little bit smaller than that, but that's that yellow zone. That's going to be between 105.43 and 105.22 is your demand zone on the Dixie. So keep your eye on that one. If that breaks, close below that, then all of a sudden we'll start stair-stepping down. But right now, I'm still okay. Even though we didn't make the higher high back on October 13th, I'm still okay with that dollar index. Lisa's a Halloween lover. You should know this. That's how I always remember. Is it? I didn't know it was after Halloween. I thought it was the weekend before because I always, it's always the weekend before. I believe your Toyota truck was built in SEC. Yeah, probably. Yeah, I know it wasn't built in Japan. Come on, Tom. I know that. All the lost Bitcoin happens due to physical delivery or fly-by-night crypto firms. Big brokerages will never lose their coins, in my humble opinion. Well, yeah, I won't say that they'll never lose their coins because if you look at what happened with Coinbase, right? Coinbase has been hacked before and had currency stolen from them. So they're still going to go through the same basic problems that I'm going to go through, right? Now, they're probably going to have better measures in place and memory things, but it's all that seed phrase. If you lose that seed phrase, there's only one of them, right? Do you think the CEO is going to be the only one who knows that seed phrase at a company? No, they'll have some systems in place, but depending on how they store that seed phrase, where they track all this information, if that gets hacked, then their crypto is just as vulnerable as anybody else. So I don't think that it's any less risky that these companies like a BlackRock or Valkyrie or ARK are going to hold their own crypto. We have to trust that they're going to keep it in the right places with the right security, the right seed phrase. Are they going to sit there and throw it on a nano ledger? Are they going to use paper wallets to break it up? I mean, those are safe ways to do it. There might be some other safe mechanisms, but I don't think that it's any less risky. It's always that vulnerability, and it's up to that firm, BlackRock, for example, to go in there and make sure that it's as safe as possible, that nobody has access to that seed phrase except those that are closest to the product. But there's always that risk. It's a different way of keeping money, right? It's a different way of storage. So it's got those inherent problems that are going to be universal to whoever holds it. For tomorrow, can you discuss how the yield dropped so much today when it took so long to reach up 5%? Okay, I'll talk about bonds a little bit tomorrow. Again, I'm going to try to bring on a bond expert, which I'll get to that one here soon. Would love to see the U.S. government account hacked. Well, yeah. See, the difference there is if you steal digital money, the government's going to know exactly where it went. If you manage to hack some ledger entry that said, oh, well, we created this much money, the government will know where that went. If you steal Bitcoin, the government's going to know where it went as well, and they'll just block that address. So, if someone went, let's say BlackRock had 200,000 Bitcoin sitting in a vault somewhere, and all of a sudden we saw through data that was stolen and moved, well, they would just simply track whichever address that went to, and they put a tracker on it, and that address would be blacklisted from here to eternity. It's just the way that it works, with big money like that. They can block your accounts. They can go to the mining community and say, hey, let's collectively agree to blacklist this address because it stole 200,000 Bitcoin from BlackRock. And then the community will probably approve that because it's just detrimental to the whole Bitcoin ecosystem. They'll roll back. It's called, they'll do a fork of the blockchain most likely, and then all of a sudden that Bitcoin goes right back to where it was. So hopefully we don't have to fork anything because it's a pain. All right, so that was your economic calendar. Let me go to your earnings calendar here real quick because we do have some big names reporting tomorrow. As you might remember, we've got two. We've got Google, and if my memory serves me correct, the October 24th will be for Microsoft as well. Yes, indeed. Here you go. Tomorrow, you've got Microsoft, General Electric, Verizon, Visa, Google, General Motors, Snapchat. Oh boy, Snapchat. I haven't looked at that one in for so long. Just trash. Coca-Cola, Archer Daniels, Midland, and there's many, many more here. The ones that I like to focus on are the after the close ones, and that's going to be your Microsoft, your Visa, and your Google will be the real exciting ones happening after hours. So we do, my friends, have a couple of popcorn trades of the day for tomorrow, and that should make it exciting. Maybe I'll do a crypto war show later on down the road. we're seeing some optimism. We're seeing some excitement in the industry. Let's hope it goes forward. Two things need to happen. Number one is we have to have the approval of a spot Bitcoin ETF, which means regulators are now starting to soften up. And number two, we need rules put in place to define very clearly what is a security, what is a commodity, and therefore now we might be able to get some of the protections for those assets. For example, if they say that Ethereum is a security, Ethereum is going to have to modify their business a little bit to comply with the rules for a security. Once they do that, then theoretically, we should be afforded the same SIPC security protection as you would by holding an Apple or an E-Trade shares. So exciting stuff happening, but those two things will really be the catalyst for a market move to the upside, and we'll have to wait and see. Hope it happens. Chio says, Merlin, do you have videos on how to safely keep the Bitcoin? No, I do a crypto class for Online Trading Academy, so I don't really do too much on my site. I do that predominantly for Online Trading Academy. We have a class starting tomorrow, which goes from 7 a.m. until 1:30, which covers the whole spectrum of crypto and digital assets. So you might want to contact Online Trading Academy for that one, but I do a couple of different programs for them. Cool. All right, everybody, that's going to do it for me. Hope you enjoyed it today. Again, I'm going to try to bring on a guest for you in the next, maybe tomorrow, hopefully Wednesday, hopefully this week, because I haven't had guests on in quite some time. But this will be a really good one because I want to talk about the bond markets and what's been going on there. Maybe even bond vigilantes. Oh, yes, that term is starting to rear its ugly head again, so we'll see maybe what that is. So if you guys have comments, questions, feedback, let me know. Email me at TraderMerlin@gmail.com or post your comments down below any of the YouTube videos. Until then, happy trading, everybody. I will see you mañana to watch the fireworks of the Google and Microsoft earnings announcement. Take care.